Hello traders and welcome to my RSI and Bollinger Bands strategy. So in today's video we're going to be talking about using RSI, the Relative Strength Index, and the Bollinger Bands in conjunction to make buying and selling decisions. So the reason I'm using these two together is I used to trade currency markets, that's Forex, foreign exchange, and I used RSI, Bollinger Bands together, and it was a pretty nice strategy. So I believe that it does translate to crypto markets as well. Additionally, many commenters had asked me to do a video on RSI and to do a video on Bollinger Bands. So I think it's best to combine them into one video so that we can get more knowledge about the market and especially momentum in the market. So before I go into what exactly are the Bollinger Bands or what is RSI, first let's talk about the settings that you want to use for this strategy. The first thing that you need to see is a Bollinger Band 22 fill. What this means is this is the moving average for the Bollinger Bands. That's the 20. I like to keep that as is. This is the standard deviation. So I like to keep my standard deviation of 2. And fill is just an aesthetic. Doesn't really mean much. But I prefer to keep it filled. RSI, I keep standard settings except I use a 30 and not a 35. You can see here that the default is 35. I don't like to use that. What that means is overbought and oversold readings would be 35 and 65. So RSI would turn white if RSI was below 35 or above 65, and I prefer to have mine at 30 and 70. And you can change this to whatever you want. Like if I made this like 20, you see that RSI would like never be oversold. I think 30 is a great number though for RSI. And it's what most people use. Yeah. So now let's talk about what exactly is RSI, what exactly are the Bollinger Bands. RSI is just a momentum oscillator, so it oscillates from a 0 to 100 scale, and it picks up on bullish and bearish strength, not based on any volume. It's not like MFI. It's basically MFI without the volume component. So it takes strength based on market movement within a period. 14 periods is what I use with this. And typically what you want to use RSI for is for oversold and overbought readings. So when price makes an extreme, that's typically when it will flip directions. And you want to use RSI and Bollinger Bands to find that moment when price is going to flip directions, either to the upside or to the downside, to make a profit. The Bollinger Bands are a little bit more complicated, but not too hard to understand. I did explain how the standard deviation and the moving average. But basically what we have here is this dashed line is our moving average, that 20 period moving average. And we also have our upper band and our lower band that are decided by volatility and not by price movement. So what that means is these are calculated not on how much the market will go up or down. This is more, these bands will tighten and these bands will widen, if widen is a word. When the market's not really moving that much, that's a period of low volatility, bands tighten. When the market's moving very rapidly, as you can see like right here, the bands get very, very wide. So that's just another Bollinger Band tool that you can put in your toolkit. And typically what you see is when the Bollinger Bands are constricting, that means that a breakout's about to occur. And when the Bollinger Bands are very, very wide like this, typically that's when the market's going to slow down a bit to gear up for the next move. You can see that here, very low volatility, and then we get a breakout, and then price goes this way. And you can see that here as well. Price isn't really moving too much, the bands constrict, and then boom, we get massively wide bands as price breaks out to the downside. So that's one way to use Bollinger Bands. But the way that we're going to use this strategy is to look for a buying opportunity whenever price goes, whenever price makes a low tail at the bottom of a band and RSI is oversold. That's our buying opportunity. And when exactly do you want to buy? You want to buy when RSI comes out of oversold and into the regular area, into blue. So if you saw this, you would have seen that price is touching the lower band, which is good. This means that price has hit a price extreme and might have overstepped its bounds. And then you would see that RSI is oversold, but you don't want to buy here. You want to wait because the market could go lower and that could hit you. And then what you want to do is on this very strong bullish candlestick, you see that RSI is not oversold anymore, and that's when you buy. And here it wouldn't have worked as well, but it would have worked very well in a spot like this, for example. You can see here your buying opportunity right there, 296, and you would sell up here. And the reason why you would sell up here is whenever price touches the upper band, it's typically a price extreme, meaning the price will come down. And what you want to do is, again, just like the oversold, you want to only sell your coin when RSI goes from overbought to the regular area. So you probably would have wanted to sell here. So you can see we go below the overbought area, or you also could have sold right here. That would have been fine. And then you wouldn't have bought again until here. So you would have gone to here, here for a nice profit, and then you would have done nothing in the market, and then you would have bought around here somewhere, which would have been a very nice profit. So that's just the basics of how to use the RSI Bollinger Bands. Looking for price extremes, looking for overbought and oversold readings, and then also looking at the volatility by how tight and loose these bands are. But it also is important to talk about stop losses and not just take profits, because your take profit will be when you touch upper band and when you get that RSI reading to go down. But what you want to do for a stop loss is typically to put it a few, for Ethereum, to put it a few dollars below the low tail. So this is a low tail here. Typically when you see a low tail here with a price extreme with an oversold RSI, price doesn't really like to come lower that much, meaning that if price does go lower and hits your stop loss, price will probably continue going lower. And that's the reason why you want to set a stop loss. A wild tail, where a very, very long tail occurs, can happen in the market, but it's still more important to have stop losses and to get hit by that than it is to just buy and hold. So yeah, that's the basics of the strategy. I would recommend the hourly. I was using the 15-minute because I like the 15-minute action. I think it's a very good time frame to trade. But you can also use the 15-minute, the hourly, and the 4-hour. I wouldn't recommend going above the 4-hour though, because you're not going to get many readings. And I think that there's many more profitable opportunities within the 1 hour and sometimes the 4-hour as well. So we can see the 1 hour here. If we just look at this example really quickly, you're not buying if you're right here. You're not buying this market. And then when RSI comes out of oversold right here, you are buying. And your stop loss probably wants to be somewhere around the 275. And then you would have caught this, which would have been a very nice profit. You would not have sold yet. You'd probably still be holding in the market because RSI is still not overbought. So that's going to be it for this video. We've gone over volatility within the Bollinger Bands. We've talked about how to buy, how to sell for a take profit, and also how to use a stop loss right below a low tail. And yeah, the one last thing that I want to touch on, which is, it's more related to RSI than it is to RSI and Bollinger Bands, but this is pretty important. RSI overbought and oversold readings are very good to trade, but there's another way that you can use RSI, and that way is to use divergence. So what divergence is if price makes a lower low, so we can see right here, price made a lower low. But RSI does not make a lower low, look like right here. This is called RSI divergence, when the momentum is not in the bearish favor, the momentum is in the bullish favor. So this would be a very good buying opportunity right here. It looks like it to me, because you have your lower bounds touched, and you have RSI going from oversold to regular area, and you have the divergence right here. And if you're really good at spotting divergence, then you can become a very good RSI trader. And you can see that here as well. If you had not bought the market here, but then you see that RSI price makes a lower low, but RSI also makes a lower low, that means that it's confirmed that price will continue to go lower likely, which it did right here. And there are a lot of spots to see this as well. Oh, this is a very good example right here as well from my last example. You see prices oversold. If you had not bought this, even though this is lower bound, low tail, and prices coming out of a oversold area, if you had not bought this market and seen this, you could have seen, okay, price makes a higher low, but RSI also makes a higher low, so this is confirmed. So buying here would not have been a bad idea if you just see RSI go out of the oversold area. You could have bought here around the 285 and gotten a very, very nice profit up to here. So now that is going to be it for this video. We have touched on three things. We've touched on the main strategy of how to use RSI and Bollinger Bands in conjunction for buying and selling at price extremes within the bands. We've talked about volatility and how the constricting bands show weakening volatility and how large bands show very strong volatility, and also how a long period of weak volatility typically means a breakout is coming, and a long period of very, very high volatility typically means consolidation is coming. And then finally, we went over Rsi Divergence, which is looking at if price makes a higher high or a lower low or a lower high, and then just seeing how RSI treats those higher and lower zones. So that's going to be it. If you have any questions or comments, leave them below. Thanks for watching.